Okay, over to you, Jonathan.
Hello, everybody, and good morning to you. You're very welcome to this COVID-19 business response webinar, because this is how we do things nowadays, with thanks to Enterprise Ireland. We're going to be with you over the course of the next hour or so, talking about matters that are very relevant to your business and to the challenges that you are facing right now. And boy, what a roller coaster of the last few weeks this has been for everybody. Nobody on this island has been unaffected by this, be it in their private lives, their personal lives, or in their business lives. So we're going to talk today about some of the bigger challenges that you are facing right now and how the supports that are available could indeed help you. So why are we here? Well, we know that the COVID-19 pandemic is unprecedented. It's introduced significant uncertainty and challenges for Irish business, and we're going to be speaking to some experts on that today to give us their wisdom, in particular Brendan Binchy. The Irish government, through a number of departments and agencies, including Enterprise Ireland, has introduced this wide range of supports to help companies like yours that are affected by this, so that they can stabilise their business and navigate through the immediate and critical challenges presented. Enterprise Ireland is at the forefront of responding to this global crisis by working with Irish companies to help them avail of the funding supports, and including a €180 million sustaining enterprise fund administered by Enterprise Ireland. We'll hear more about that. There's a COVID-19 business financial planning grant. We'll hear about that as well. And the question hopefully you'll be asking at the very end of this is, well, if I haven't applied for these grants already, maybe, well, why haven't I, and how I can go about it. So let's talk about the agenda over the course of the next hour or so on this webinar. We'll talk about the key challenges facing business. We'll talk about that big beast that raised its head very early on in this, which is managing cash flow. How do you maintain your business if cash flow has either stopped coming in or slowed, or has become a lot more unpredictable compared to what it would have been, say, in January and February? Financial planning, then what are the best practices? What's the importance of financial planning in a crisis such as this? And then we'll talk about accessing liquidity and funding the business, all of which are very important as we try to prepare for the next phase. What happens on the far side of COVID-19 when your business tries to get back to where it was before the crisis hit? This is very much an interactive session, ladies and gentlemen. If you see on the control panel, if you're watching on a laptop, or if you're watching on a mobile phone, then just below the screen, there is an option there for questions. So if you have a question that you want to ask at some point during this process, all you have to do is just type it there and it will come through to me, and I will be able to ask our panel of experts. So who are the panel of experts, I might hear you ask? Well, we can tell you who they are right now. We have got Brendan Binchy, who is the CEO of ROCG Europe. He is a business consultant with huge experience. He's been through crises before, but none quite like this. Donncha Cullinan, who is the financial product manager for the business financial planning grant at Enterprise Ireland, and Ciara Fitzpatrick, who is the financial project manager for the Sustaining Enterprise Fund of Enterprise Ireland, and we will be speaking to them later on. In fact, Donncha has joined us. Brendan, we'll ask you to turn on your screen as well now, and we'll go through that in just a while with the questions and the agenda for you guys. But I suppose there are three key challenges which we need to address at the moment, and that's what Enterprise Ireland is very much focused on this recovery roadmap. So number one, it's stabilise, protect your business, maintain operations, and retain your employees. Keep the wheels on the wagon. Number two is reset, which is adapt your business plans and operations to the new conditions, which, let's face it, are new and couldn't have been foreseen. So it's about how you can control what goes on in the middle bit, because ultimately what we want to do on the far side of this is to recover, restart innovation, and capitalize on early demand as the recovery develops. So those are the guiding principles. Brendan Binchy and Donncha Cullinan, good morning to you both, gentlemen. I suppose, Brendan, first of all, this is really an unprecedented crisis, isn't it? Before we even get into the nuts and bolts of managing cash flow, like it's been completely crazy.
It's extraordinary. I mean, I think people would call this kind of a black swan event. We haven't seen the likes of it before. Probably the most severe collapse in commercial activity globally ever, certainly since the recession at the start of the last century. And it's having very different impacts on different companies, and the firms that are going to let's go back to that the sectors first of all. If you're consumer facing and it's not food, you have a problem, and you have to readdress where you're at. Other industries such as technology, healthcare, they're actually kind of powering ahead. It's not, still impacting, but they're powering ahead. And then even those who are trading are suffering from supply chain difficulties at the end of the day. So it's a pretty major impact, and those that are going to survive at the end of the day, it'll depend on what industry you're in, the strength of your balance sheet, and that's a complete variable. It's different for every single company, and the support they can tap into, like what we're going to talk about today, from government and whatever to get them back on the road again. And most, as you think you said earlier, Jonathan, most people have kind of already onboarded the very welcome government supports that were there with subsidies, and the banks have been quick with bank moratoriums. But now we're down to the sharp end, the business end of things. And for most companies out there, especially whose business models have been busted or impacted severely, it's really about trying to map a really precarious commercial exit path that will kind of be stop-start in how it behaves from the lockdown that we're suffering at the moment. And a lot of these companies are going to have to change how they do things, become more operationally agile and whatever. So it is a major challenge. I haven't seen anything like it, and as I say, bless me, Father, it's my fourth recession.
You've been through a few, and excuse me, it's definitely different. Yeah, Donica, to you, what are you seeing across EI companies about cash flow? Because cash flow, for a lot of people, it just vanished because there was this uncertainty. We have to keep cash in the business, and if you keep cash in your business, you don't pay the money that you owe to other people. I mean, what have companies been reporting back into you?
Yeah, we see all of what Brendan has just talked about. I mean, EI is all about helping our companies to innovate and scale internationally, and that really has taken a significant pause at the minute, and people are trying to figure out what does the next thing look like. And again, we have 5,000 clients across all sectors, all stages of development. So each client is unique, and therefore each client is uniquely affected. And it all depends on what is your particular circumstance. So Brendan alluded to tech companies. Yes, some of them are doing well. Maybe they've just raised a financing round and were loss making anyway. So they have finance for the next while. But then there are others that are in the travel tech space, and they have been absolutely affected. Their business model looking forward needs to be completely different. All the way down to our clients, and Brendan alluded to some of the guys in the language schools, and they have literally all of their cash flow is going to stop for the next while. They need to now figure out what they're going to do next, and to figure what does the new norm look for them. And then on the positive side, we have companies that have repivoted their offers into contact tracing, or to help queuing systems for testing, or some of the guys producing metal work for ventilators. So each company is uniquely affected, so therefore each company needs to navigate their own way through this.
In many ways, Donica, was the speed at which this happened, did that kind of change the momentum around this? Because it all happened so fast. I mean, what you listed there was unique challenges for each sector, but the fact that everybody was in this together meant that innovation, for which Enterprise Ireland companies would be renowned, well, that gene came out quite strong in many of them.
Well, and we think, listen, and again, we have the kind of the framework that we're using is to stabilize, reset, and recover. And most of our companies figured out the stabilize bit because everything just stopped. Money coming in stopped, but also money go out stopped. So that's the piece of triage, stop where you are, put the brakes on everything. And now we're entering that phase of reset. So what does the next norm look like? How do we plan for that? How is our industry really affected, or is it something that is it going to be a U-shaped recovery or a V-shaped recovery? And now let's start looking at the next phase. Whereas everyone has just stopped, and now we now start planning to what the next phase of this is going to look like.
Okay, so on those key points, Brendan, stabilize, reset, recover. What actions should companies have been taking around cash flow to manage those particular challenges?
Yeah, I suppose the starting point is what I mentioned earlier, your balance sheet. How strong or robust is it? Can you reassess it, and can you strengthen it? And that might be using some of the supports that are out there for deferrals, maybe refinancing. maybe converting some debt into equity, or maybe even what do you call it, as I say, if you bought stuff in the good times, maybe out of cash, maybe you can actually refund and refinance those. But the whole idea is to lower your gearing and lower your risk financially. So that's your starting point. And then you avail of all those subsidies and moratoriums we've talked about earlier already. You look at things like, can you onboard more shareholder money in the form of loans or equity? Can you defer capital expenditure? They're typically the things you look at. But I suppose underpinning all that is the need to assess the new business environment out there, because it's impacted every industry differently. It's impacted the customers of those industries. It's impacted your competition. We've all seen, like, the world has had a crash course in e-commerce and digital payments and remote working. So the whole technology piece needs to be reassessed. The impact on the shareholders, what they take out of business, and then there's that. I mean, we've never before had, I think, had such a robust impact from the whole social side of things and how we do things. So you need to get your head around that environment and how it's going to impact your business, because that's what you've got to sail your business through for the next little while. And that means then looking at your products. What are you selling? Who are you selling it to? Are there people that more of your ideal customers that you should be dealing? Are you looking for more of them or dealing stronger with them? Are there some you should be offboarding? So it's a new product development. Should you be accelerating it or slowing it down? When is the return on investment? All of these are questions as a management team you need to consider. And then once you've kind of reset your business model, and I've done that in record time there, you've got to get back to the things that cost money. And that's what drives costs in your business. You know, what are the major things? Is it people cost? Is it technology cost? Is it automation cost? And assessing your productivity, what you're getting out of it. And that might mean some rationalization or some investment. So it's not all about cut. But the way you pull all that together then is by building flexible forecasting models, both for your trading and your profit, and the cash flow drops out of that. And you're not going to get that absolutely right from day one, but at least you have the template for actually looking at the impacts, what they could be. And as this crisis evolves, and I think, as I said, it becomes more acute as we move towards the autumn, you're going to see things shift. And you need to be able to iterate to get that, just to reassess where you are, and then look at the supports. You know, either you might be onboarding new supports that I think Ciara is going to talk about later, but there'll be other ones falling away, like the government subsidies on wage. So it's a complex mix, but the cash flow management piece is have some sort of a plan about it. You wouldn't want to get up in an airplane without a flight plan, would you?
No, certainly not. I mean, the one word you use there, which I think is very relevant, Brendan, is flexibility. Because if you set yourself on a particular course right now, saying, I'm not going to deviate from this because I believe this to be 100% right, you're setting yourself up for a massive fall. You have to be flexible because you don't know. And what I've said consistently since the start of this crisis was anyone who tells you what a month's time looks like is a liar.
Correct, and I think you're bang on the money there. It's about having your thinking done. It's a bit like sending a football team out onto the pitch with a game plan. When the opposition comes running at you, the dynamics change, and you have to recast what you do. And it's no different when in the game of business either. So I think
lots of questions are coming in, by the way. So keep the questions coming in using the side panel, or indeed using what's below the screen there. And Denise Riley is one of the 370 people who are watching us right now, had an earlier audio problem, but has solved that. So that's good. And we can see that the system is working. So good to have you with us, Denise. And there's other questions coming in that we will get to over the course of the Q&A. But Donncha, that flexibility, the supports that have been mentioned, I suppose that brings us on to what Enterprise Ireland is able to help with. Cash flow planning. What can be done, and what support is there for people looking to address that challenge?
Yeah, like we've always said that a good plan is the basis of everything we've done. And in fairness, the Brexit has given us a trial run at this, because we saw some of the shocks there from, say, the exchange rate movements, or the rapid exchange rate movements from 74 to 94, and companies not being able to figure out what does that mean to them. So the having a plan to be able to put down at least a framework to try and figure out what do these shocks mean to my business. So you always need a plan to figure out how much capital you need. You need a plan to figure out to convince someone to give it to you. And then you need, importantly, a plan to manage it thereafter. So the plan, as you said already, has to be flexible, because the assumptions that you make, and we're talking to companies and consultants who are using our plan now to say, well, what are the assumptions I use in 6 months' time? And we're kind of going, it doesn't actually matter what it is, as long as you can flex them, as long as you can iterate your model to, when it doesn't pan out as you thought it might, what does that mean? What are the implications? What does it need for the cash that I need? And so EI has put together, one of the first supports that we had was a business financial planning grant, and that's really to help our companies to work their way through this. And it's been a really important product, and a really a product that's been in demand from our customers, because we need to figure out how to get our customers planned and ready for the next phase. Planning was always something that we pushed hard, and COVID has just made that even more relevant and more important, because cash is tight, capital is tight, and we are all going to get kind of 1 or 2 shots to get this right, and that's it. We don't have infinite time to keep going and making mistakes.
Let's move on to financial planning, because I think that's a natural segue into this. It's funny, because previous seminars that I did with Enterprise Ireland in person, in a room, ironically not as big as the one we're doing right now online, but it was around Brexit and planning and trying to get everything right. And one of the things that came out, because Brexit was such a challenge and is still such a challenge, and I'm sure we'll touch on that later, the idea that there are those that have best practice, who are better at it than others, and that's a mix of the people factor, it's a mix of the type of company. But in terms of financial planning around COVID, Donncha, what are you seeing in terms of best practice and financial management and planning from the companies that are currently working with Enterprise Ireland?
Well, again, we're seeing people that can figure out what are the shocks to their business, and what are the implications of that from a cash flow perspective, and what are the, so we have one company that used to make GAA jerseys. So there's no championship this year, so they're not going to be making any GAA jerseys anytime soon, but they have an opportunity to invest in making PPE. So face masks, those kind of gowns and stuff. There's a plan required for that. And the best practice is to understand, well, listen, if I need to invest in 3 new machines, what's that going to cost me? What does the productivity like? And again, to test scenarios, can I get that funded? And if I can't get that funded, maybe I have to change it slightly. So best practice is what we've always said. It's to have a financial plan at the heart of the business, a financial plan that's not just a financial plan to raise the money from the bank or EI, or from, as Brendan said, your equity shareholders, but also a plan to manage the business thereafter. And a plan that isn't a plan just to raise the money, but people are using to say, well, did those assumptions come to bear? If they didn't, what do we have to change? What does that mean for our funding? What does that mean for our KPIs? And to continuously iterate and iterate and iterate. And that is what best practice is. We're not going to say it's going to be easy, but at least it takes away some of the variables, because it's difficult for CEOs and entrepreneurs to understand all of the different things that are coming at them. The plan, a decent plan and a decent planning framework will allow them to kind of start making rational decisions based on inputs that they're seeing.
Brendan, look, planning and sound financial and business planning, it's what you look for when a company comes through the door. I mean, are they making it up on the back of the fag packet, or have they actually planned this through? A lot of plans have unfortunately had to be nearly fully ripped up at this point. So therefore, you have to come at this with the same flexibility that you would have before. What's important now in terms of that financial planning, given that we have, as Donald Rumsfeld once said, known unknowns and unknown unknowns?
Yeah, well, I think probably the first thing is actually to lean back on your own and understand what you've got right to date. Don't feel that the whole world has been kind of pulled, the rug has been pulled from under you. So, I mean, there's a lot there. And your plan should help articulate, because you'll be bridging between now and what the future. There's pre-COVID, the COVID acute period, and there's post the acute period. And what you want to do is build a bridging strategy. And a plan basically is the management think pad or a playbook to actually help them bridge that gap. And it should explain how your business works. So this isn't all about getting lost in numbers or throwing it off to the accountants who are the druids in your organization. This is about the whole management team sitting together and actually using it as a think pad to understand how it has worked and how it could work in the future. So included in it, you'll be testing profit improvement strategies, but that'll come down to all the usual things. What price are you going to sell it at? How many do you have to sell it at? What's it going to cost? You'll be getting down looking at your sales and marketing plan more granularly. Who are you going to sell to? Target ideal customers. So you're setting your whole strategic direction. And in doing that, you're also trying to manage your risk, identify where they are, and then manage them. So you're designing, if you like, a whole new business model for your business. And that's really, it's going to be the critical success factor for those companies who are going to come out of this, how well they can design that new business model of what they sell, who they're selling it to, and how they're going to make money for it. Once you've got that done, your investment and funding gaps are just going to drop out. And then it's a matter of taking it to the likes of Enterprise Ireland, the Strategic Banking Corporation, one of the pillar banks that's associated with it, to look for the funding. If it's compelling, you'll get it. But before you even get to that stage, it's really important that you use it as this think pad to sensitize and stress test the reset. So what if I get it wrong by 20% here, or what have I got to do a little bit better there? And there are companies that are doing better than they initially thought they were doing, and others doing worse. So you need to be able to kind of stress it, and you also need to be able to identify from the plan what your debt service capability is, because most of the supports that are out there, apart from the wage support at the moment, at the current time, they all require the repayment of capital. It's not, there isn't money being thrown at you. So you have to be able to identify, listen, I will be able to service this. So ideally, again, I suppose the critical importance is this is a communication tool. And it's a communications tool for your senior management team. It's a communication tool with providers of capital. It's a communication tool for your people who work with you, and perhaps even critical strategic suppliers.
This is not a time to stick your fingers in your ears and not listen to the things you don't want to hear. You have to face the good and the potentially very bad in this scenario. So when you're doing that, when you're looking at your business and you're running the rule over your customer list and how you're performing, what are the most important things to identify, Brendan?
With your customers particularly, well, first of all, segment them. You will have your star players who will actually, these are the people who get what you do, love what you do, and want you to do more of it. But at the other end of the scale, you have your Ds, so to speak, who kind of you seem to be continually arguing with, fighting, scraping to get paid, and whatever. And this is a time to make some strategic decisions. So you're trying to onboard more of the type of people that you like. So that's your central customer demographic, for to use a long word around it, or your ideal customer. So define what they are and go looking for them. Then you'll have kind of different grades down there, and your marketing strategy for the different grades will be different. A lot of businesses find with the Pareto rule that kind of 80% of their business typically might come from 20% of their customers. That's a really good focus point. And times like this are a great time to refocus on the business rather than just serving it blindly.
There's lots of questions coming in. I just gave one that's after coming in from Oisin there. Would Brendan suggest, even if the plan shows a positive cash flow position on a stressed financial model, having any additional capital in reserve, given forecasting is so difficult? The dreaded, how much do I keep in the bank question.
Yeah, the safety gap. I mean, everyone would love it, but be careful again, because it goes back to this has to be repaid. And if you're looking for it for comfort, probably better to take it from equity than debt if you can. But you've got to banks. The banks are out there and they will screen your business model and your business plan and say, listen, why are you looking for this money? You seem to have the resources. So I go back to my earlier point, stress test your downside. When you're doing a business, when you're putting in any business case, you'll do a base case, you'll do an upside, you'll do a downside. And you need to be, so if you articulate your downside and say, this is what could happen, and there's a need for funding at that stage, that's a very good reason to look for it. And you'll find people open, if you've done that thinking in advance, rather than going with kind of a base case that says we don't need it, do the scenario testing that shows the downside. That should indicate whether you need it or not.
Absolutely. Again, just consider all options when you're doing it. Donica, and thank you for that question, Oisin, and we'll get to the other questions that are coming in over the course of the next half an hour or so before we wrap up. Donica, Enterprise Ireland supporting companies, we referenced the €5,000 business financial planning product. Do you want to talk us through what that is and how people can access that?
Yeah, so this is one of our first responses in terms of our COVID toolkit and response kit. And it's to that point that we think that planning is really important, and we've created a panel of consultants. It's a €5,000 grant, 100% grant aided, and what we're trying to do is get companies to use qualified consultants that we've identified to help them put a plan together. It's important to say, and listen, we're trying to make it as streamlined as we possibly can. It's an online application. But the important bit is that the outputs are defined. So what we have looked at, so Ciara's product and Donald's product, the Sustaining Enterprise Fund, we looked at what the requirements from an information perspective for that's going to be. And we also talked to the banks and to understand what they would be looking for in terms of their applications and equity providers. So that it's designed that the outputs are standardized. And we know that different companies won't be able to fill it, to do it all completely. But it's broadly what any capital provider is going to look for. So there's a standardized set of outputs. And the important bit is that we have two panels of financial consultants that will help our companies work through this. As Brendan said, it's not a question of handing it over to the consultant and saying, here you go, I want a plan in a week's time. It really is a plan that needs to be co-created with the consultant to help the company work their way through what are the various options that they have, what are the various mitigation strategies that they have, and to come up with a plan that's going to help them navigate their way through this. We would love to see plans, warts and all. There's no point in producing a plan that's a pitch. That's just not going to work, because we need to be realistic about what the challenges companies are facing and where they can start finding answers to that. So Enterprise Ireland we have an array of new products that are available, but all of our existing supports are still open for business. Our HBSU pipeline is strong, and a lot of the other pieces. So we're saying the plan will help you understand what the sources of capital that you require are, how you might go and help them get them, and then what you do to manage that afterwards.
Is there a little bit of counterintuitivity there, which is a very hard word to say at this hour of the morning? Yeah. That normally business people, when they're applying for something or they're pitching, will put the best foot forward. You're saying put warts and all on this one. So it's almost asking people to step outside their comfort zone and be more true than they normally would to about the pitfalls that they're facing.
Listen, if you put a spin on it, anyone who's going to give you money is going to try and figure out what spin is being put on it. So you might think you're pitching it. Anyone who's doing a proper due diligence on it will peel that away very, very quickly. What we're saying is that if you put assumptions down, yes, those assumptions mightn't come to pass, but at least people will see that you've identified them. And as I said, the warts, if there are no warts, it's just not believable, and especially in the current environment. So
certainly not at the moment.
No,
So let's talk about how people can do this. The other question I'd always ask is how much red tape is involved in applying for these grants? Because normally the companies are very busy at the moment. They want to make it as easy as possible, and I think the next slide gives us some indication as to how people can actually go and get this detail.
Yeah. So listen, it's an online application. In the first instance, talk to your development advisor. And that should be a conversation with the DA as to what does this look like for the company, and what do the next set of products look like for the company. If you don't have a development advisor, our business response team are there to take your call and direct you to someone to talk to afterwards. We've tried to streamline this really, really down. It's a very simple online application. We are processing them at a huge rate, and a huge shout out to our grants admins team, because they have taken a product that didn't exist and got it online, and it's now our biggest product and our fastest growing product. I've seen cases where we've gotten stuff through in a day. So an application was made in a day and the letter of offer going out the same day. So they're not all going to be like that, but we had some stumbling blocks at the start, but I think it's pretty flying now.
Okay, and that's good to hear as well. So it is working, and people are getting access to that cash and getting that consultancy and getting the warts and all that they need. Okay, let's bring in our next speaker if we can. Ciara Fitzpatrick is waiting to join us. Ciara is the financial product manager for the Sustaining Enterprise Fund. in Enterprise Ireland. Ciara, good morning to you, and how are you holding up in these current climates?
Good morning, Jonathan. I'm holding up pretty well, all things considering. Thank you for asking.
We're going to talk about accessing liquidity and funding the business. So we've talked about the earlier stages, the cash flow, the immediate panic, the bit in the middle where you're forming the plan. But obviously, companies need to prepare for what's on the far side of this. And there's no point in being caught short if you don't have funding in place for when the economy does start to recover. What is the scene like at the moment on funding, debt and equity, shareholder value, repayment, all of these big questions? They're very hard to answer at the best of the times. What's the landscape like right now?
Well, I suppose in terms of when any company is looking to raise funding, the first thing that they need to consider is, how quickly they need it. And companies, I suppose, usually have a choice as to whether to seek debt or equity financing, as Brendan has mentioned earlier on. And the choice often depends on, how easily accessible the source of funding is, the company's cash flow, and how important it is for the company to maintain control, or sorry, how important it is for the company's owners to maintain control of the business. But in the current climate, I suppose, those things are a little less clear. So when considering debt, for example, with the banks, companies need to be able to demonstrate their repayment capacity. And I know Brendan has mentioned that a number of times earlier on. And as revenues have stalled currently, that can be quite difficult. As you've said yourself, it's very difficult to see beyond the next month. When looking at equity, companies obviously need to be able to demonstrate increased shareholder value. And again, depending on the business that you're in, that can also be quite difficult. But ultimately, I suppose the best option is really, it's about, what is your current financial position and how quickly do you need the funding? From an EI perspective, we're encouraging companies to engage with their banks, with their existing investors. And in fact, we believe that addressing the liquidity gap is a three-way arrangement between the company, the promoters in the company, between the company's funders, be that VCs, or sorry, venture capitalists, the banks, friends and family, and in EI. And we want companies to engage directly with the Strategic Banking Corporation of Ireland or with their financial institution to access the liquidity lending schemes that they have. And we also want companies to come and talk to ourselves about the Sustaining Enterprise Fund.
And we'll come back to the Sustaining Enterprise Fund because that is the big element that we want to talk about today. But Brendan, how can companies prepare to raise funding right now? Because of all the things we've talked about there, uncertainty, crisis, reinvention, changing consumer demand, all of the certainty that you'd have had in your back pocket going in to look for funding, it's all gone. So how do you deal with it? Because many of the businesses that were successful before this will be successful long after this, but we have this crisis in the middle.
Yeah, it's that bridge that needs to be crossed, Jonathan. And as the solid reference point, as I mentioned earlier, and this will all be captured in your business plan, is your pre-COVID financials. That is your baseline. Everyone's going to get thumped in 2020, everybody. And it's trying to assess how badly you're getting thumped. And then you're going to start a pathway to recovery from 21 to 22, and you need to see how you can increment your business back up. Will there be new products or new services, whatever? All of that should be addressed in your business plan. And it should articulate that, because if it's that communication tool I was talking about earlier, it will be compelling and it will be credible, and it will secure funding, because it will fundamentally address the three basic things that are looked at: the commercial risk, the financial risk, and the management risk. And the commercial risk is really all about, and it's not really financial stuff, it's about the products and services that you're going to supply. It's about how you address the market. But underlying that will be the financial risks will be articulated as well. And that's your typical balance sheet, profit and loss account, and cash flow that we talked about earlier. But the management, I said earlier, lean back on your own strength and experience, because the management risk, if you've led and developed a company for the last 10, 15, whatever number of years to a certain point in 29, people will take account of that. That experience, the competence, the motivation they have, all of that should be captured when you're looking and articulated to your bankers and to Enterprise Ireland, so that you put your best foot forward. Now, I'm not talking about Cinderella plans here that Donica was talking about earlier, where you kind of look like, you're going to the ball overnight. They'll get rates.
Are you saying Donica looks like he's going to the ball? Because I think we can all agree.
Very moment here, actually. Anyway, so but they're the things that you need to look at. And again, how well have you designed your debt, your capital structure? Like what's the mixture of working capital? Are you using working capital the right way? Can you take term debt? Are you taking some equity on board? So you get the balance that Ciara was talking about there, the three-way balance. And then will it sustain testing? Is it real? And you'll find that with all your strategic banking corporation and banks, they'll stress it. But I mean, they're not stupid, but they're not the devil incarnated either. I mean, people are here and they're trying to help if you articulate your case correctly.
Can I ask you, I mean, you're on your fourth recession, as you've pointed out, or your fourth crash. We are in better state to deal with this now because we still have infrastructure left over from the last one. I mean, you mentioned the SBCI. Banks are obviously in a different landscape now than they would have been in 2007, 2008, less of a crisis, although not completely gone. You have government agencies such as Enterprise Ireland. There are more options now than there would have been before, and that has to be a good thing, Brendan.
Yeah, and I think, we're not coming from a systemic failure in banking or anything at this stage. We're talking about a lot of the businesses, got lean and mean after the last recession. And, it happens every time as you move on, you gather a little bit more fat and you'll see that people have been trimming and they'll look at things a little bit harder. But I mean, I do think that fundamentally the business fundamentals are stronger. And that's why I say look back and lean on what you have done in the last 2 to 3 years when you're trying to communicate what needs to be done,
Okay, and there will be more available later on to talk about this as well. And by the way, people have been asking, the slides that are below us here will be available later on for distribution as well. And it's great to see so many of you, close to 400 people who've been with us since the start of the webinar. It's great to see you stay with us because, Ciara, the supports are there. And again, you're going to talk now about the Sustaining Enterprise Fund. It's kind of split into two groups, isn't it, depending on the size of the company. So do you want to talk us through what is available in terms of those SEF funds?
Sure. So, excuse me, Sustaining Enterprise Fund, it's what we set up as a 180 million euro fund. Sorry, excuse me. And it's targeted at manufacturing and internationally traded service companies. So manufacturing companies can be domestically focused. If you're a service business, you're trading internationally. And it's directly targeted at those companies that have been negatively impacted by COVID. As you said, we've divided it into two streams. For companies that are generating revenue up to 1.5 million, they can access up to 25,000 in support, and it's a one-off support by way of what we call a repayable advance. And then for companies who are generating revenue between 1.5 million and 5 million, they can access up to 50,000. And this is short-term working capital injection. It's an easy to apply for support. It's an online application, not dissimilar to the business and financial planning grant that Donica mentioned. And we can turn it around pretty quickly. Beyond that, then companies can access up to 800,000 liquidity support. Support to help companies with liquidity and also to sustain the business into the medium term. And the minimum support for that offer is 100,000. A company could, for example, have applied for support in the 50,000 and come back to the larger support at a later stage. It doesn't, you're not precluded once you've applied for one. The kind of companies that can apply are companies that were employing 10 or more people at the 29th of February this year, that they have suffered a fall in their revenue or profitability of 15% since the COVID outbreak, that they're talking to a financial institution. And I go back to this three-way, this is about, I suppose, the company, Enterprise Ireland, and the banks or the funding institutions coming to the table and helping to put a plan in place to support the company. And finally, I suppose those companies that weren't in financial difficulty in December 2019. So for example, a company that was financially sound December 2019 were maybe targeting the Italian market or the Spanish market, and sales have now dipped. You know, when they recover, the company will continue to be financially sound into the future.
Yeah. And those are the companies that your heart breaks for them, because they were dealing with a situation whereby everything was great and it fell off a cliff overnight. It's happened in so many different industries, but it doesn't mean that the businesses aren't viable and won't be viable in the future. It just means they've hit a bit of a wall. Now, let's talk about the next slide, which is going to talk about the available that fund between 25k and 50k. Talk us through that.
So as I mentioned, you know, if you are generating revenue up to 1.5 million, you can access 25,000, and between 1.5 and 5 million, it's a 50,000. The nature of the support is a repayable advance, and it's provided to companies over 5 years in one installment. So I suppose the attractiveness about this offer is that there is a 3-year moratorium on repayment. And, you know, we talked earlier on about, you know, companies being able to demonstrate their repayment capacity. In this instance, there is, I suppose, there's support for the company for the first 3 years in the fact that they don't have to repay anything. There is a administration fee of 4% that applies, with a 0% coupon for the first 6 months. And as I say, it's an online application, so you know, companies can go online to I think, as our website details are available there, and they should also talk to their development advisor and discuss an application, and we can turn it around from receipt of application to payment within possibly 3 weeks.
Okay, that's 3 weeks. That's quite and less red tape than people would perhaps fear. Again, you know my obsession with red tape. It's not overly complicated, is it?
Absolutely, it's not. You know, this is a fairly straightforward application, and you know, the support of the development advisor as well to help you fill it out. But really, it should be intuitive for the companies to fill this.
So the bigger amounts then, the 100k to 800k. Tell us a little bit about what can be provided there in terms of liquidity.
So again, I suppose minimum support is 100,000 up to a maximum of 800,000, and the instrument is a combination. So we can, it can be repayable advance up to an amount of 250,000, and anything in excess of 250,000 could be equity or loans. I suppose the temporary framework under which we're operating within the EU allows us to provide funding in a number of different ways, and that is repayable advance, equity, and our loan. But typically it will be 250 repayable advance, and anything in excess of that will be what we call convertible preference shares. A company could, for example, come in and look for 500,000. We could actually give it all in convertible preference shares, but it goes back to the point I made earlier on, is how quickly do you actually need it? And if you need something up front, we can give you, you know, an amount by way of a repayable advance. It's a 3-way participation again. It's EI, the banks, and the promoters. If it's a situation where you know, companies having difficulty raising external funding, either from the banks, from the VCs, or from or within the business itself, you know, you should still come and talk to us. Again, you know, to contact your development advisor, or we have established a business response team who are dealing with inquiries on a daily basis.
And again, I suppose it's fair to say this has been up and running now for a couple of weeks, so it is there is a process now, and that process is working well. Kieran, there's lots of questions coming in for you. You'll be delighted to hear, which we're going to get to in just a minute, and we'll go through some of them. In fact, if you have a question for anybody, for Brendan or Donncha as well, now is the time, because we're about to move on to the Q&A section. But Donncha, before we do that, I mean, there are lots of Enterprise Ireland supports out there, and I suppose it would be remiss of us not to mention the others that are available for people right now if they don't need or want to go for what we've been talking about.
Yeah, and again, it goes back to my initial point that each company's journey is unique and each company's situation is unique. So listen, look for wherever support. Like I always kind of say, I don't care where my companies get money as long as they get the money. So look under all of these rocks to make sure that you've availed of everything that you possibly can avail of. So the Restart grant, the local support from the Leos, The revenues, the revenue deferrals is a huge one, and then the SBCI again. We will have seen that their initial loan scheme is out. They're continuously iterating that. The future growth loan scheme, there will be a fresh injection of that coming up. So there are different places to get capital, and we have looked at this always as a tripartite arrangement, that there is a piece that the company has to do, there's a piece that the banks have to do, and there's a piece that Enterprise Ireland and the state have to do. And when we look at the mix, and the answer is going to be a mix of all three. So go find where it is. And again, these slides will have, the fuller slide deck will have all of the links to the various supports. I'm sorry,
Okay,
listen, don't get me wrong, just on that one, EI is still, all of our existing supports are still there. So that's an important piece. It's not just the new stuff that we have.
They haven't gone away at all. That they're still there and ready to support and do everything that Enterprise Ireland has been doing to date. It's just we've had to bolt these other pieces onto it. So let's move on to the question and answer session, folks. And again, please do keep the questions coming in. Kira, some have come in for you. Tim has asked, can you please clarify the size of firms eligible for the SEF, i.e. turnover greater than 5 million? If you have a turnover greater than 5 million, can you apply for it?
Absolutely, yeah. I mean, this is available to companies of all sizes. And I suppose what I should say as well is, if you are generating, say, revenue of 1.5 million, you can apply for the large SEF directly. You don't have to apply just for the small one. So turnover is not a criteria, but the company must have been employing 10 people at the 29th of February of this year.
Okay, another question from Sean. Kira, are turnover figures based on 2019 numbers are forecasted for 2020? Because obviously for many companies, the 2020 figure will be reduced.
They will be based on 2019 figures. Yes.
Okay, so 2019 figures again, because you don't know what 2020 is going to look like.
Exactly.
A criminal situation may be. Kira, is that funding directly targeted at survival capital, shoring up the as-is business, or can that funding be allocated towards the third stage of the recovery, the redesign and execution of the new business model? So I suppose that's a relevant point as well. Is there any kind of limit or criteria set on how you spend it if you get it?
So what we ask for is, over the course, as part of the application process, companies are asked to outline what the expenditure is going to be for, and it is very broad. So it may be for wages and salaries. We anticipate that's what most of it will be. It may be for new capital equipment. What I would say as well is, though, our other, and Donncha mentioned this, our other supports are also there. So if a company, for example, wanted to engage in some research and development as well, research and development funding may be a more appropriate funding mechanism than the SEF. We really, once we get an application in, we'll look at it, and we will decide at that point in time what the most appropriate funding mechanism is.
Nicola is asking a question that a lot of people have actually asked, and I don't know whether Donncha or Kira would be best placed for it. Is there any funding similar to the Sustaining Enterprise Fund for companies with less than 10 employees? Because I think 10 employees was the entry criteria there. What else is available, Kira?
So certainly Microfinance Ireland is a company that deals with less than 10 employees, and they have a similar loan. I believe it's up to 50,000, which is a 3-year loan at 4.5%. So companies that have less than 10 employees can certainly go and talk to MFI.
Brendan, there's a lot of people putting questions about where you can apply for types of funding. Michael asked the question, the future growth loan scheme with the SBCI, any views on when the additional funding might be available? I mean, that again, everybody wants the magic money tree to be shaken to see what falls off. But there is talk, and we saw what happened in Germany just a couple of days ago, of investment to support business. It's not happened here yet. I mean, there is a sense that people are holding on for it. I mean, are they wrong to hold on to see if something else might follow?
Again, I suppose it'll be a question of needs must, Jonathan. I mean, the Strategic Banking Corporation, the Future Growth Scheme, there's a huge amount of attractiveness in that. It's 10-year money. And so there's a longer profile for repayment, and that from a cash flow and a debt service point of view, that's welcome. And I believe it's imminent. But again, I mean, everybody is scrambling to get their products ready, including the Strategic Banking Corporation. So it's really, and I do believe, as you say, with the European money coming in, that there will be this whole area of supports and loans and maybe even grants will develop as the crisis evolves. But I think there's a lot of people waiting and seeing, as you say. And if there is no immediate cash need, that might be a prudent thing to do. You don't have to rush this if you don't have to rush it. Let's just put things in context,
Question here from Rolando. Good morning, Rolando. Do companies have to have a business financial planning done before they apply for the SEF, Ciara?
No, they don't. But I suppose what we found is that, and Donncha mentioned this earlier on, that the output from the business and financial planning grant leads directly into the input for the Sustaining Enterprise Fund. It's an opportunity for a company to work with an external consultant to help them tease out all of the things that Donncha and Brendan referred to earlier in terms of having that plan in place. But they can apply directly, and we've had a number of companies to apply directly.
Donncha, I suppose for you, I mean, there are other types of grants that are available for startups or smaller businesses as well that are worth exploring. Do you want to maybe just address that point?
Yeah, and so all of our, as I said, all of our standard stuff is open. We, like our competitive start fund, had a recent call. Our HPSU, which is our startup pipeline, is full, and our IC every 2 weeks is seeing lots of cases. So they're the main pieces from the startup perspective. But then all of the strategic consultancy, the capital equipment, the R&D stuff, that's all still there as well. It all starts with a conversation with your DA. Just on the future growth loan scheme, the capital and the re-top up of that is actually imminent, and we think that some of the banks actually have some of it already. So again, look for that. Keep talking. As Brendan and Ciara both said, this is really, really dynamic, and things change all the time. So we could have this webinar next week, and we'll have some different information. But it's up to everyone to keep looking, figuring out what's changed and what's appropriate for them.
Yeah, anyone who tells you what a month's time is going to look like, they're not telling you necessarily the truth. There's a question here from Niall, which I want to put to you, Brendan Binchy, if I can. Can you advise what to do if my bank is not supporting us, as we decided to move banks just before COVID, which I'm sure was a great idea at the time, but all of a sudden less so now because you don't have that same relationship that you might have had with your previous bank. I'd like to apply for the Sustainable Enterprise Fund. As you say, Brendan, every challenge is unique, and if you're finding doors closed on you, or if you're finding the door that you thought would open isn't opening, what should you do?
Okay, well, the first thing is, before you start blaming the banks or anybody else, reassess what you can control, which is the communication of your business and how you articulate. I talked about a business plan being a communication tool. There are good business plans and there are bad business plans. Bad business plans don't communicate well. Good ones will absolutely be compelling. So readdress what you can control, and I would say avail of the grant that's out there to help you shape your business plan. Do it. Articulate. I find with a lot of business plans, sometimes you get very good businesses, but they're not so good at articulating what they're really good at. You know, how good is their product? What kind of volume are they doing? The state of their customer base. They throw up sometimes a set of numbers, a whole pile of numbers, which really doesn't articulate exactly how well they do what they do. So look at it as a communication strategy.
Question from Paul. How many years projections are required for the business financial planning grant?
We're looking for 3 years at the moment, but knowing full well that years 2 and 3 will be based on assumptions that you just need to write down, and then we'll see where they end up. So yeah, it's 3 years in total.
Look, there's lots of people asking questions that are very relevant to them. Like, you know, when do I need to tell people I'm changing course here, or that there's been some dramatic shift? Brendan, you have a lot of companies out there that have had to pivot very quickly, and they don't know whether they're going to stay on the pivot or they're going to pivot back. And there's a fear I'm taking from some of the questions that are coming in about admitting that out loud, going back to warts and all. You know, I don't know whether people perceive it that they may have somehow done something wrong that ended up in the pivot, or whether or not they're just not willing to admit it out loud. How important is it that you communicate everything effectively right now to everybody, to staff, to suppliers, to customers, to banks, to Enterprise Ireland?
Sure, it is absolutely critical that you communicate correctly. I mean, I have companies who have been through the planning process, who are actually have painted the worst case scenario, and they're saying, listen, okay, well, first of all, telling your people that, listen, we're putting a plan together, that we're actually developing this out. We're not sitting on our hands waiting for it to come to us. That's hugely kind of progressive in itself, and sharing that fact. You don't have to say you have all the answers at this stage, but that we're asking the right questions of the business. And I think, again, letting people know, I mean, there is going to be impact on this. I mean, when the supports fall away, there may be redundancies, there may be rationalizations. And companies need to get ready for that. And I think you need to be open and fair with the people when you're talking with your team, that say, listen, we don't know what the changes are. We're hoping for the best, but you know, there could be radical changes in how we work going forward. And just put it out there. People are remarkably resilient, and you know, they respond to honesty.
Ciara, just one final question. A lot of people are asking about personal guarantees for the SEF. Is there a personal guarantee involved?
No, it's unsecured, so there's no personal guarantees required at all.
Okay, and Brendan, a follow-up question there. Will banks look for personal guarantees right now, do you think, if you're coming in looking for extra cash?
It depends. If you're coming through the Strategic Banking Corporation, some of it's guaranteed through the state. So I would my starting position would be resist, resist, resist.
Just on the SBCI stuff, the first 500,000, there's no personal guarantees allowed.
Yeah.
No personal guarantees allowed. Okay, well that's an incentive.
There you go.
Can I just ask, just to go through the panel with one final question, and it's simply this. And Ciara, I'll go to you first. What's the thing that you've taken most from the last few weeks in terms of dealing with the companies that you've been working with and those coming through the door? What's the most important thing you want to leave people with today?
Well, I think there's having that plan in place, I think is absolutely critical, because I suppose if we go back even this time last year, you know, although, you know, we've had 3 years of planning for Brexit and things like that, companies are starting to look at putting plans in place. But I think this is really now focused the mind. And as Donncha said, like, you know, we've approved a huge number of applications for this. So people are really recognising the need to have that plan in place. And that plan helps you when you're going to talk, not just Enterprise Ireland, but whether you're talking to the banks and your investors as well.
Okay, Donncha, what's the most important thing that you've learned from this?
Ciara just stole my answer, so I'll have to come up with something else. But
That's why I went to her first.
Yeah, it's that you don't just use that plan to get the capital, that plan is an integral part of how you manage your way through this, and that the plan isn't left on the shelf. It's used by all of the senior team, that finance is central to that piece of, central to that decision making on it. And sorry, listen, the key takeaway is talk to your development advisor. If you don't have a development advisor, talk to the business response team and to start that conversation with Enterprise Ireland.
Brendan?
Ingenuity, agility, and just being as quick out of the blocks as you can be. Don't wait for it to come to you. You need to go and get it. And the companies that I'm working with that are actually doing well so far are the people who've almost completed their first round of the planning cycle and are now measuring their results relative to it. So go do it. Don't sit and wait for it.
Okay, well, look, it's been a very interesting hour going through all of that. I'd like to thank, on behalf of everybody who's been watching in, Donncha Cullinan, Brendan Binchy and Ciara Fitzpatrick. I leave you turn off your cameras and you can go and make a cup of tea because, you know, it's 11 o'clock and we've all gotten into a new routine while we're working from home. So thanks very much for all of that, folks.
Thank you very much.
Thanks to everybody who sent questions in over the course of the last hour as well. I didn't get a chance to get to them all, but we will be able to send in some answers to those questions later on as well. The entire deck is going to be available. You can turn off your cameras now. Go off and make tea. There you go, Brendan. They're all gone. You can get the deck through Enterprise Ireland a little bit later on. The supports that are available, they are there. You will get the type of hearing you would expect in this circumstance if you were to go forward. Warts and all is what I'm taking from the last hour. A full list of these supports are available at globalambition.ie/COVID-19. You can get in touch with the development advisor. Your local development advisor will be listed on the website. That link is also with us here, and you can contact the COVID-19 Business Response Unit, business response at enterprise-ireland.com. What's very obvious, folks, is we are in this together. There is no such thing as a unique crisis, even though this crisis is turning out to be unique for all of us. ask for those supports. We will get through this, and we will be celebrating happier times again over the course of the next few weeks, months, and most certainly over the next few years. Thanks to everybody for tuning in this morning. There will be other webinars from Enterprise Ireland as we continue to address this crisis going forward. Thanks to everybody who helped set this up today. Thanks to everybody who sent questions in, and we'll talk again very soon. Have a good one.